market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Iran has launched a fresh wave of missile and drone strikes across the Gulf overnight, targeting at least 5 countries across the Middle East. Under fresh attack from Israel this morning, Iran has increasingly relied on drones in its retaliatory assaults over the past few days. Well, we're now joined by Becca Wasser, a defense lead for Bloomberg Economics. Becca, thank you for joining us. Do we know how many missiles and drones Iran has now left?
No one actually knows how many missiles and drones they have left, in part because no one actually knew how many they had at the start of this conflict. But we have seen the United States and Israeli strikes really going after Iran's missile program. But they've taken the approach of going after the Archer rather than the arrows. And by that, I mean they've gone after Iran's missile factories, its underground missile cities, as well as really going after missile launchers, trying to make it so that Iran cannot actually send those missiles to various countries, including the Gulf states and at U.S. bases in the region. But there are still a number of missiles that haven't been accounted for. But even more so, the drone threat is intensifying because those don't need launchers to be able to be set off. And that means that those are being used in increasing numbers for attacks on the Gulf states, U.S. bases, and other areas.
So, Becca, can the U.S. sustain this campaign indefinitely?
So that's a great question. And I think it's one where the U.S. can sustain this conflict for a longer period of time. We've heard President Trump say 4 to 5 weeks. We've heard, the idea of this could go on for as long as it takes. That doesn't mean that this is necessarily going to be what happens, in part because President Trump has campaigned against the idea of forever wars and for the U.S. getting mired in the Middle East in the past, and those being relics of the past and mistakes that he's not willing to make. But that being said, there are some constraints on U.S. military power and how long they can go. One of those is what its munitions stockpile looks like. And I think we're starting to see the U.S. take a shift in its campaign where it's moving from these standoff strikes where it was using some of these high-end, longer-range missiles to trying to move closer in using cheaper weapons, frankly, that it has in greater amounts. And these are usually air-delivered joint attack munitions. But that requires the U.S. to have air superiority over Iran. And that's not something that they've been able to achieve just yet.
Becca, thank you so much for the update. Becca Wasser there, defense lead for Bloomberg Economics. Now, the war in Iran has, of course, entered its 7th day with no apparent end in sight. U.S. and Israeli strikes continue whilst the Iranian foreign minister told NBC that his country has not asked for a ceasefire and has no intention of negotiating. Well, joining us now is Catherine Ashton, a former European Commission vice president, former EU foreign policy chief who led the bloc's previous nuclear negotiations with Iran. So, Cathy Ashton, thank you so much and welcome to The Pulse. 7 days, and I don't know how you think this ends or how long this lasts for.
Well, it's a big question. It's a question that's attributed to David Petraeus in Iraq when he said, "So tell me how this ends." And I think it's a question we're all beginning to wonder about. No doubt that President Trump wants to see a different regime, wants to see the end of any nuclear ambition for Iran, wants to get rid of ballistic missiles as well, and wants to see Iran severely weakened in the region. And, of course, for Prime Minister Netanyahu, that's a good ambition from his perspective, too. But as we know, wars don't follow straight lines. They do things that you're not expecting. So it's really difficult to see quite where this will go. And Abbas Araghchi, the foreign minister, saying no negotiations yet, is an interesting position for Iran to put itself in.
I mean, a lot of people were taken aback by the intensity of the Iranian, retaliation, but also its capabilities in terms of weapons. Was this a gross miscalculation on the U.S. side?
Well, one of the things that happened when they ripped up the JCPOA some years back, the big agreement with Iran on its nuclear capabilities, was, of course, there were no more inspections, there were no more monitors much harder to get information about what was going on. So knowledge about what was happening in Iran was much more severely limited, and that is a problem. I think what's taken everybody by surprise as well is the way that Iran has chosen to conduct its retaliation. I mean, firing against civilian targets, firing across the Gulf, I presume in the hope that those countries would say to America, enough, we want you to stop.
Do you think, they're quietly saying enough, or is this a matter of survival? That actually, if you're Dubai with the big financial hub, if you're some, the countries with a lot of tourism, you actually need to really see a change of regime in Iran now?
Well, it's unquestionably affecting people who either live in the Gulf, who are expats, as we would call them, from different parts of Europe or the US, who came there for a higher quality of life and a peaceful and secure environment, who are now beginning to wonder how this ends, when it will end. And I think it's also for the people who live there all the time, a sense of, we're being dragged into something. How do we stop this? And that's inevitably going to put pressure not just on Iran to stop firing the missiles, but on the US and Israel too.
I mean, as a career diplomat, is there an off-ramp for President Trump right now?
Well, I think the president will decide for himself when he's done it, as he would put it. And I suppose my concern more than anything is we end up with a weakened Iranian regime, but still a regime that can continue. And as somebody said to me the other day, if the IRGC, this group, this well-embedded group that really do lead the country, if they decided to surrender, well, who would they surrender to? Because there isn't the kind of organised opposition. And although there's a coherence across Iran that they want to see the end of the regime, there are 13 different ethnic groups. And there'll be those who want to see perhaps a bit more power, want to see themselves more able to participate in life in Iran. And that leads to all kinds of problems and challenges and jockeying for position that can cause a lot of difficulty in the future.
I mean, what do you think will happen on the ground? Again, it's very difficult to have an uprising if you don't have arms, and if you've been, there are people that started an uprising that were massacred in January and February.
Well, exactly. I mean, this regime does not take prisoners. It will destroy people if it needs to. It is weakened, but it's still there. The discussions about who will follow on from Supreme Leader, the Ayatollah, are still in flux. We don't know what's going to happen. But there isn't yet a sense that from this will come the kind of democratic regime we'd want to see. We'll have to see how that unfolds in the days ahead. But if President Trump is going to stay engaged with this, I think they need to move to the next phase of thinking about, well, what does this mean in terms of supporting people on the ground? And that's not just about arming people. It's also about how do you build the kind of structures and so on. And that's a really complicated and complex thing to do, and requires the region to engage with that as well.
But have you heard, I mean, this is also the thesis of your book, right? What next? In foreign policy, you have to have an idea of what happens the next day. Do you see that consciousness in the American administration?
Not yet. I think when it began, one of the things that was so challenging was trying to work out what the end game was. If you begin a conflict, first of all, it doesn't go the way you think it's going to, because they never do. But also, what are you trying to achieve? What is the end game? And it was quite complex to understand. Was this just about degrading the capacity of Iran to be able to use any kind of weaponry, nuclear or otherwise? Or was this about something much more fundamental? And we know, our history in the region tells us that it's very easy for things to become difficult and implode, and actually you can end up with a much more chaotic situation. So at this point, I'm not sure that the US really does know what it wants to achieve beyond certainly degrading and preventing Iran playing the role in the region it's played in the past.
I mean, a lot of people are banding around, especially on social media, is this the Third World War? Is there actually an idea that China could get involved, or that Russia can get involved, or you dismiss that?
I don't think they will. I think for Russia, they've got another war to conduct. And one of the problems, of course, is while we're all focusing on this, we're not focusing on what's going on in Ukraine and the challenges of weaponry for Ukraine. If America is depleting its own resources in the Gulf and is actually looking elsewhere for weaponry, what does that mean for how Ukraine can conduct the war? And that is a really difficult position. But I don't think this will expand in the way that people's worst nightmares might be. Having said that, it is still across a huge number of countries where people are being hit, and we're seeing missiles and attacks coming forward.
And now we're also talking about, the Strait of Hormuz almost being at a standstill, and this idea that the U.S. promised maybe some insurance, unclear how that would work, but also maybe safe passage through, with help, I guess, armed vessels taking care of the tankers. How would that work? And would Europe need to be involved in this kind of operation?
Well, as you've seen, European nations have taken their own views about how this would engage them, from the Prime Minister here through to Chancellor Merz through to the Spanish Prime Minister. Very different positions, if you like. However, when it comes to providing support for tankers and for shipping that's providing for our energy needs, and I think Europe will consider at least what it should do. But it's very complex, because what we're also going to see is energy prices rising, and this for a lot of countries is a real problem.
Yes, especially the U.S. when you have the midterms around the corner. What is China thinking right now? There's been a lot of speculation in the last couple of years about what they would do with Taiwan and, the waters around there. Does it make it more likely to do something or less likely?
It's hard to read, because for China, this region was really important to remain stable. They were a big part of the JCPOA negotiations. The Chinese participated in all the 4.5 years that I led the negotiations, and participated properly and well. And that was a demonstration that they saw this as an important region of stability because of energy and so on. So they won't be happy at all with what is happening here. I don't think they'll want to engage directly with it. I think they'll also be looking at what this means perhaps in Russia and Ukraine and their engagement there. But they'll be thinking about what this means for the stability of the markets, for the stability of their economy, fundamentally.
Kathy, if you had one question that you could get answered by anyone in this conflict, what would that be?
I think the question would be to President Trump, which would be the David Petraeus question. So tell me how this ends.
Thank you so much, as always, Cathy Ashton, a former EU High Representative for Foreign Affairs and Security Policy. Now, coming up, we discuss how markets are pricing the Iran war with Peter Oppenheimer. He's Goldman Sachs' Chief Global Equity Strategist. So that interview is coming up next, and this is Bloomberg. Well, Tom Barkin, the Richmond Fed President, says the central bank's response to the war in Iran will depend on how long it impacts the U.S. economy. He's been speaking exclusively to Bloomberg's Mike McKee ahead of the Fed's next meeting on March 17th.
Don't have any sense on how long it's going to take or what the implications are going to be. Obviously, you watch oil prices. While the U.S. is no longer a net importer, it's still the case that the price at the pump matters a lot in terms of sentiment, in terms of crowding out other spending. And so I'm just watching prices at the pump. They've jumped up over the last week. You can see that when you drive around. But of course, no one knows whether this is going to be short term or long term. And so we'll just see where it goes.
Well, back in the 1970s, we had the oil price shock, and we had gas lines, and people were miserable and having to pay all this money. And so the Fed eased into that. That turned out to be a mistake. Does this put on hold ideas for the time being of continuing to cut rates?
Well, I think we'll go meeting by meeting, and we'll see what we see when we get there. Gas prices, obviously, if they're up, that is inflationary. Textbook monetary policy would be you look through a short-term shock, but you don't look through a long-term shock. And I think that's a lot of the assessment people are going to have to make.
Well, the Open Market Committee, before the Iran war started, basically the views seem to be that we're at peak tariffs now, and inflation will start to come down in the latter half of the year. But you throw this into the equation. Where would you put yourself in terms of thinking about the progression of inflation and when you might have enough information to decide whether a cut is worthwhile or not?
Well, we'll have to see how it evolves. If you go back to the fall, the conversations I have with businesses suggest to me that they believe their pricing power is very limited. Consumers are exhausted by inflation, affordability. People are pushing back, whether that be not purchasing or private label or trading down to lower price retailers or repairing rather than replacing. And so in the conversations you do have a sense that we're on the backside of this inflationary period and we'll head back to normal. And the numbers in the fall, absent the government shutdown, we're saying much the same thing.
Well, Tom Barkin, the Richmond Fed President, speaking exclusively with Bloomberg. Now we're joined by Peter Oppenheimer, a Chief of Global Equity Strategist at Goldman Sachs. Peter, thank you so much for being here. I mean, for the last 7 days, we've been focused almost on nothing else than the Mideast war and, of course, what's happening with Iran. Does that change the trajectory for equities?
I think it does certainly raise the risks. And the reason for that is because it's another uncertainty. We already had a degree of uncertainty building in around AI, and maybe we'll talk a little bit more about that. But I think that clearly anything that changes the sort of inflation growth mix or the risk around that is going to have an impact, particularly so given that equities are relatively expensive. And that's been true in the US for a long time. But the rotation diversification trade we've been talking about over the last year, with other markets outperforming, has basically left them all quite expensive. And I would also say, bear in mind, in all equity markets in the last 6 months, you've seen a big upgrade to cyclical performance, reflecting a lot of confidence in growth. So anything at the margin that dampens that leaves them vulnerable, I think, to a correction, but not more than that. Nothing, I think, systemic.
So give me a sense, first of all, of how long, oil prices have to stay elevated for it to have an impact on how, I guess, CapEx for a lot of chief executives, but also prices and margins. Yeah,
well, I think there's obviously two things here. There's how much oil prices go up and for how long they go up. So our assessment is that given the changes we've seen so far in aggregate globally, the effects on inflation are relatively modest, something like 0.2 on inflation globally, a little bit more in some other places, and very modest global impact on growth, around 0.1, a bit more than that, 0.2 in Europe. But if we start to get them going to $100 or more, and they're prolonged, then you start to get into global inflation going up maybe 0.7 and a contraction in global growth by about 0.4. And any combination there between. So clearly this is an anxiety not only about how long the conflict goes on, but what kind of effect it's going to have on the mix between growth and inflation. And we should also say that there's another channel, the whole sentiment channel. Financial conditions have been tightening globally about 0.3 since this conflict started. And that's another route to which it can affect confidence and equity valuations, at least in the nearer term.
I mean, we're talking about the closure of the Strait of Hormuz. I mean, it's not closed, but actually there's no traffic almost at the moment. It's almost ground to a halt. Does that impact, I mean, does that play on inflation expectations or on shipping costs more directly?
Well, both of those, I think. Again, the issue really is 20% of world supplies are going through that channel. It's obviously very, very significant. But there's a lot of uncertainty about how long that disruption will go on for. And that knocks on through to higher shipping costs, of course, and the routes that need to be diverted in order to get goods and services around the world. And that can take longer to do as well.
And I guess there's still the uncertainty of trade and tariffs, because we don't know if, some of the tariffs that were paid, you can claim it back, whether now there's 15%. I imagine chief executives are also distracted with what's going on geopolitically to really look into that as much as maybe they should.
I think that's all right. And the last thing that investors like to see is uncertainty. And this is coming on top of a period where you've seen very, very strong rises in risk assets. So the valuation is part of that equation. But I do think it's important to also say, and we've written a note this week about correction risks, we do see further downside, but I don't think this is likely to morph into something more prolonged or deep or a bear market. And I think partly that is because the underlying growth cycle is pretty robust globally. You've got a lot of policy support coming through. Secondly, earnings, actually, at least up until this point, have been quite strong. And rather unusually, actually, earnings revisions globally so far this year have been going up. That's typically not the case. But thirdly, and very importantly, I think private sector balance sheets around the world are healthy. Households, corporates in aggregate, and banks, of course. And that, I think, again, softens some of the worst second-round effects that a shock like this might generate.
And again, you touched on private credit and the fact that you don't think there's anything systemic, right? If there was I don't know whether a correction or just basically a wipeout of certain parts, what's the read across to equities?
I think that there are risks in the private credit market. Of course, it's not as regulated, and in the US in particular, there's a lot of private credit that's been extended to software companies, which have derated a lot. And so, again, I think you can get a correction there, as with the equity market. Not systemic, I think, because you don't have the same leverage in the system that you have when credit is extended through the banking system, which obviously happened significantly in the period before the financial crisis, for example. But in an environment where people, investors, are jittery and concerned, narratives and any potential risk to their current positions, I think, just get exaggerated in price moves.
Peter, overall, what's your take on AI? So I read almost every note that's on AI because I'm trying to get smart and understand. And of course, it's just very difficult because you go from how much disruption, it could be 200,000 jobs to 50 million. So it's difficult on how do you see it? There's so many angles to AI and how quickly this is interpreted and changes our economies.
Yeah, well, I think there are two parts to this. One of them is the impact on the economy and on the labour market, but very importantly also on productivity, because we and my economist colleagues are quite optimistic about the ability for these models and technologies to generate a relatively rapid ramp-up in productivity over the next decade. And of course, in time, we also believe that new products and services and jobs will come along. We do see some disruption to the labour market, but I think what we're also seeing from a market perspective is investors going through waves of reinterpretation about what the impacts of this could be. So we saw, of course, fantastic performance, and we should say the fundamentals remain extraordinarily strong for the hyperscalers. But of course, this scale of the increase in capex has been so intense that investors are beginning to worry about the potential returns that those can generate, at least for all of them together. Secondly, and understandably, investors have become very heightened to the potential risks of disruption within the technology space. Software has been the most obvious casualty of that repricing of longer-term growth confidence. And we're seeing waves of that going through the market, which I think in some sense is quite healthy. But I think the third thing that we should emphasize is that this ramping up of capex is re-engaging the growth prospects of the technology sector with the physical world. For the first time really since the rollout of the internet. So we're seeing within markets a broadening out of returns and the value that investors are prepared to attribute, on the one hand, to things like software and technology, but on the other hand, to physical infrastructure that's helping to roll out more data centers, but also energy supplies, at the same time that governments around the world are raising spending on defence. And that's all physical, and that is helping to broaden markets.
So net benefit.
Well, certainly a change in the leadership drivers, but within the context, I think, of really still quite a healthy economic cycle underlying what's happening at the moment.
Peter, thank you so much, as always, for joining us. Peter Oppenheimer, their Chief Global Equity Strategist at Goldman Sachs. Now, coming up, Donald Trump fires Kristi Noem after a controversial tenure in charge of U.S. Homeland Security. So we'll have that story next. And, of course, we'll also go back to what's happening in the Middle East. Qatar warning that the war will force the Gulf to stop energy exports within weeks. So this is a huge development. It's a new Bloomberg story, so we'll have plenty more on that shortly. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump says the U.S. continues to, quote, totally demolish Iranian forces, and that he wants to replace the leadership structure in the country. Now, Tehran responds with a barrage of missiles and drones targeting countries across the Persian Gulf. Shipping in the Strait of Hormuz has reportedly ground to a near-complete halt, with no oil shipments in the past 24 hours. And President Trump fires Kristi Noem as Homeland Security Chief after months of controversy, the first cabinet member to be removed during his second term. So President Trump has removed Kristi Noem as Homeland Security Secretary. She's the first cabinet member, as we were just saying, being dumped during the second term. For more, we're joined by Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Laura, thank you for joining us. So why did President Trump sack Noem?
Well, as you noted, Noem has had a really controversial tenure, including most recently with the killing of 2 Americans in Minnesota during a federal agent crackdown, immigration crackdown in the city. She's also a federal official, said that the best kept secret in Washington was the affair that she was having with her chief of staff. However, neither of those things ended up being the root cause. It was an ad campaign featuring herself that cost nearly $250 million. She was testifying on Capitol Hill in recent days about this, and she said that President Trump personally approved the budget for this. He was not happy about that, including, a senator saying that he heard this and as she was testifying this, realized that she was going to be, dead as fried chicken with regards to this. And, just really within a couple hours, a couple days, she was out of a job.
So who's going to replace her as Homeland Security Chief?
Yeah, so there's a senator from Oklahoma, Mark Wayne Mullen is his name. He's a relatively young guy, only been in the Senate a couple years, who will be taking over for her at the Department of Homeland Security. That means it will open up a Senate seat. But this guy has an interesting background when it comes to immigration. He is very much a hardliner. He's a staunch Trump ally, and particularly when it comes to issues like birthright citizenship, he's taken a very staunch position. He said that babies who are born to illegal immigrants but in the U.S., which means, per the Constitution, that they are U.S. citizens, that they should also be kicked out of the country along with their parents. So at least the policy that we saw from Noem when it comes to Homeland Security, we can expect to see that. We may see a little bit different management. There was a lot of concern among Republicans that, Noem had things had gotten under control under her tenure, but broadly, the policy will continue.
Laura, thanks so much. Laura Davison there, Bloomberg's Washington Deputy Bureau Chief. Now, marine traffic in the Strait of Hormuz has ground to a near-complete halt with no oil shipments passing through in the last 24 hours. More and more shipping companies are avoiding the Gulf region altogether. We're now joined by Alaric Nightingale, Bloomberg's Europe Oil Markets Editor, and Brendan Murray, who leads our global trade coverage. So thank you both for joining us. Al, let's start with you. How could this oil trade disruption actually affect some of the buyers and sellers in Asia and Europe?
Well, it's already affecting the buyers in Asia in a very clear way. They're hugely reliant on the Persian Gulf as a source of crude oil for their refineries. And we're seeing signs of cutbacks across Asia. In the Middle East itself, refineries are already cutting back quite sharply. So we're losing supply, and the prices of some of the fuels like diesel and jet fuel are soaring. It's a huge problem that is kind of moving into the retail sphere as we speak.
Oil isn't the only thing, Brendan, that's transiting through there. If you look at, I think, 20% of global trade, so what does it mean for other shipping containers?
Yeah, there are two main ones, container shipping and air cargo. And at the moment, container shipping is also at a virtual standstill. There are about 100 container vessels in the Persian Gulf just unable to move and unable to either discharge their cargo or pick up cargo and move on. The port of Jebel Ali, operated by DP World, is the biggest port outside of Asia. It's a transshipment hub, so goods come in from Asia, and they come off. They sit on the dock, and then they go on another ship to Europe or to the U.S. And the port is operational, but there's not a whole lot of cargo moving in and out of it. The air cargo side of things is also at a virtual standstill. The big carriers, Qatar Airways, Emirates, Etihad, they're all more or less completely grounded, operating some limited flights. So that's disrupting and really halting a lot of the goods that flow through there. Big companies have their supply chains connected through there, so we could see the ripple effects in Europe and the U.S. as well.
So I know we've talked about this, before. It depends on how long it's. If not closed, certainly how long traffic doesn't pass through. What do we know about some of the oil containing ships or the producers? Do they go round and kind of go through, South Africa, or do they ship it in other means?
If the Strait of Hormuz is closed, you lose a fifth of the supply of oil. That is just kind of cannot be rerouted. You can get some across Saudi Arabia, and we're seeing that. Some's going to the port of Yanbu for export instead. So that's helping a little bit. But fundamentally, there is a vast loss of supply. And if this continues, eventually all of the tankers that are in the region are going to fill up. Yep. And then they have to fill up their domestic storage, and then that starts to run out of space, and you can't keep producing. We've already seen that in Iraq.
I mean, just to be very clear, is it that insurance is so high and that the dangers are so high that you say, why would I put my tanker with my staff in that strait? Or is it that it's actually closed?
So, as you may remember, the Trump administration were talking earlier this week about having an insurance and convoy plan. From the owners that we've spoken to, the concern is not about insurance. The concern is about the safety of the ships. Right. And even if you have a convoy, it doesn't necessarily solve everything. Would you want to go through, even in a convoy, in this environment? I think a lot of owners are saying, I'm not so sure.
Yeah, absolutely. I went actually fishing, which was also not a good idea 6 months ago in that strait. Air shipping, is that even a possibility? I mean, it's considered for some things, but you can't airship a lot of this heavy stuff.
Yeah, exactly. And it's very expensive compared to ocean shipping. And the cost of air freight is already going up. We've seen increases from Asia to the Middle East, and then from the Middle East to Europe, already going up in the neighborhood of 10 to 20%. And it's only going to go higher the longer the airspace is closed in the region. And so a lot of goods can be moved from air to ocean, but there's no ocean freight moving either. So there's a bottleneck that's forming. It's mostly contained in the region right now, but we're already seeing the carriers, the ocean carriers and the air carriers, trying to figure out where this cargo that can't go through this main transshipment hub, where it's going to go now. And it has to go to ports in South Asia, ports in Europe, and those ports don't have the capacity to handle any extra cargo at the moment either. So we've got the makings of another supply chain crisis if this drags on for weeks and weeks.
Brenda, I mean, for me, that's very, it's another supply chain crisis. I mean, this is like shock after shock after shock for a lot of these trade and shipping and vessels. Does it mean they're more agile, or is it just difficult because this is like the 10th shock in 2 years? Yeah,
exactly. It's like a port shutdown during the COVID pandemic. It was, but you knew it was temporary, and supply chains were flexible enough to recover. So this is open-ended. We don't know how long this war is going to last, and so if you're a logistics manager, or you're a company trying to figure out that you need to make sure that you get your parts for the cars that you're making or the machines that you're making. There's just so much uncertainty right now. The bottom line is, as Al said, it's going to mean higher costs, and those are just going to filter through eventually down to consumers if we see this a much longer protracted situation.
Thank you both for joining us. A terrific panel to try and understand what the way forward could be. Alaric Nightingale, Bloomberg lead Europe oil reporter, and Brendan Murray, who leads our global trade coverage. Coming up, Philippe, Salle, the Atos chief executive, on the company's full-year earnings and what's planned in 2026. That's next. This is Bloomberg. The conversations that matter, the insights you need. This is the Pulse, and I'm Francine Lacqua here in London. Now, our next guest has recently returned from a trip to the U.S. as part of her ongoing work advocating for the City of London as a global financial hub. Well, we're now joined by Susan Langley, Lady Mayor of the City of London. So, Lady Mayor, thank you so much for joining us. I mean, there's all this history and, of course, everything that we've seen in the City of London over the last hundreds of years. What's been the most remarkable thing in the last 2 to 3 weeks? There's a lot of trade. Now we're talking a lot about what's happening in the Middle East. Do you see that from the position you sit in, about even people in the City of London being anxious?
I don't see the people in City of London actually being anxious, but you do see the insurance industry coming to the fore. I mean, we're still number one in terms of the global hub for insurance, specialist insurance. Lloyd's of London, really innovative. And this is where Lloyd's comes into its own. I mean, catastrophe, terrible things happening, but for global trade, it's really important that shipping continues. And I'm really pleased to say that Lloyd's is right in there and is continuing to insure, because that's what we do in the City of London.
Yeah, it's just very difficult. We're hearing, some of the insurance premiums going up to $1,500 if you have tankers going through the Strait of Hormuz. I mean, again, what does it mean for the City of London? I'm sure they're very busy insurance traders right now trying to figure out what happens next.
Yeah, I mean, I think in terms of risk, it's such a fluid situation. And I think the thing that's happening at the moment is not necessarily the insurance, it's safety of the crews. And that's why we're seeing many of the ships actually not moving through. But I think on a day-to-day basis, I mean, business continues. Business to business always continues. The great thing about London is our stability, financial strength. We're not going anywhere. We just continue to perform.
I mean, does all of this instability across the world change the strengths of London? I don't know whether it's a moment to lean in on some things that could actually put the City of London more in the spotlight.
I think you're absolutely right. And when I travel, one of the key words that I use now is actually stability. We have the ecosystem, we have the talent, we have the infrastructure, but based on our history, London is a stable environment, always has been, always will be. One of the things I heard in the US is people are actually far more positive about the City of London, the UK, overseas than we actually are here. But it's just a brilliant centre, and I think that stability, our dependability, the rule of law is really important right now.
I mean, do they ask about crime rates in London? I don't know whether there has been a campaign to portray London as extremely dangerous that you see as misinformation or just misinformed or misinformed.
Yeah, no, you're absolutely right. It's one of the things I heard in my first week, and I was actually quite unsettled by it. Yeah. And I've heard it 2 or 3 times, both here in the UK and overseas. There is an active disinformation campaign portraying London as this crime-ridden city. You step outside of your office and you're bowled over by a tsunami of crime, and that's absolutely not true. So there is an active campaign out there that we do need to counter. I was thinking the word disinformation, though, almost gives it kudos. I mean, it's lies, OK? There is...
I was going to say, is it malicious?
I think it is malicious in some cases. It's difficult to know where it's coming from, but it's the fake TikTok videos, that are very clearly AI generated. But when I hear people in the US actually say, I'm going to come to London, I'm not going to wear my jewellery, we know it's something we've got to counter. You've got to counter it, but also people have to take responsibility for where they get their news. Do they get their news from you, or do they get it from TikTok?
Well, that's always a good idea to get your news from Bloomberg. Lady Mayor, talk to me a little bit about what the City of London needs. I don't know whether it's a big IPO or just a big win that they can show the world that they mean business, because there is a lot of negative headlines, not on misinformation, but just the fact that it's becoming a less attractive place to list.
I don't think that's true. I think what London needs to do is talk about its strengths, OK? So being British, we're really, really good at saying what we're not good at, but we're very, very bad at saying what we are good at. So we shouldn't sugarcoat anything. But if you look at our strengths, I mean, business confidence in business is actually really positive, but we don't shout about it, which is why one of the things I want to do is a bit of a kind of a Team UK approach and try and get businesses and associations and government to talk about our strengths, because it is really not as negative as it's portrayed, but that's our responsibility to tell people that's the case.
But does the City of London need a stronger government? Because there are a lot of question marks about the future of the Prime Minister, which, again, when I travel, I get asked quite a lot about.
I think what we need to do, when you look at the economy, to me, there's 3 legs in a stool. So you talk about the costs, which we can't do much about. We talk about the tax, which we can't do much about. So the third leg is actually, how do you make business as simple as possible to transact? How are we the simplest place in the world to do business, which means simplifying regulation, making it really easy to list and really fast to get licensed. That's the leg we need to talk about.
Lady Mayor, I mean, the UK pension industry is going through a massive transformation, and there's also more U.S. private equity getting into the insurance market here. And so there's a worry that actually, some of the pension schemes will now be buying U.S. private equity instead of UK gilts. I don't know if it's something that you're having discussions about, or, there was such a big push to make sure that the pensions in the UK also invested in UK stocks.
Yes, and there's an awful lot of work going on in that space. We have something called Sterling 20, which is the 20 large asset management and pension funds looking at the infrastructure projects. So there's active work underway on that, and I do know that the pension funds are looking at how they do invest, so completely focused focused on that.
And you think they will do it? Does it mean more risk? But then if you look at private credit in the U.S. at the moment, it's even more riskier than anything we could buy in the UK, potentially.
I honestly don't think it means more risk. I just think it's a trend that's happened over the past few years. It's something that's happened, and the focus now has to be on how we get it into the UK. And I do know the government and the business and the city are fully focused on it.
I know when you go and meet heads of businesses, heads of trading floors, of financial services, what do they ask you?
They actually ask us why we're so hard on ourselves, actually. It comes back to that thing. If you're talking about overseas, it comes back to the thing about why are the British so down on the British economy when we actually think it's great. People want to invest in London, they want to trade with London, they want to live in London. I think within the UK, once again, I come back to they're actually really positive. I think what you have to do is we have to be clear that how we match investment with opportunity. And I think some of the opportunities to invest in UK businesses are not as clear as they should be.
Is the City of London engaging much more with reform? We're a long way off, actually, the elections, but actually they're doing very well in the polls.
Yeah, I mean, I can't talk for what businesses and the associations to do because my role for the year is purely apolitical, so I stay out of that area.
Yeah, which is always actually a good idea. When you look at the priorities, so you've been in this job for
almost
6 months.
Yeah, 5 months. Almost halfway through.
And then it's a 12-month role. What will you focus the next months on?
It's more of the same. So one, it's making sure we're positive about the UK and we're actually talking London up and selling its strengths, not being negative. But it's also matching investment with opportunity. And that's financial investment. And also it's human capital, doing something around talent. You know that I'm an East Ender, so I really care about opportunity and how we get people into the city.
I know there's been a lot of connections with financial hubs in the Middle East. They must be going through an extremely difficult time at the moment. Are you planning any travels or any conversations with them?
Yeah, I did have a trip to the Gulf booked. It may or may not be postponed, but I absolutely hope that I can get there over the next 6 months because, as you say, we've got huge ties. It's a growing market and there's great opportunities for partnership with the City of London in the UK.
Susan Langley, thank you so much for joining us today. That was, of course, the Lady Mayor of the City of London. Now, the French IT company Atos has reported full-year revenue just below analyst expectations and says it sees 2026 operating margin of about 7%. Well, joining us now is Philippe, Atos Chief Executive and Chairman. Mr. Salle, thank you for joining us. First of all, give us an indication of the year ahead. Again, I don't know whether you worry about price increases, about shipments, about everything that's concerning software, but what's your biggest risk right now?
No, we don't see that much, I'd say, risk. The only, let's say, risk that could happen is that, of course, if the war in Iran is too long, it could have an impact on the economy and then, of course, on the impact on the, let's say, IT budget coming forward. For the moment, we don't see any impact at the moment, so we will see probably in the coming weeks.
I mean, you've done a huge deal, of course, with creditors to slash your debt last year. Where are you now in this turnaround plan?
So, in fact, yes, we do a big movement, I would say, in December 24 with a new debt and with a swap from debt to equity. We launched a Genesis plan in the course of 25, which is a transformation plan. And in this plan, there was a lot of different aspects. We repositioned the branding. We put a new place, a new organization, new talent. And of course, the transformation plan that we call a Genesis was launched in the beginning of 25. We are almost 90% complete in terms of savings for Genesis. We will finish the plan in the course of 26. And I would say 25 was the year of the reset, putting a lot of things in place. And 26 is the year of the rebound. We are quite confident now that we're going to sign more contracts in the course of 26.
I mean, when do you expect to touch a low point in revenue? And actually, in terms of layoff, for example, have you done with the layoffs and the disposals?
Yes, in fact, for the layoff, most of it has been done in the course of 25. There are probably 1,000 to 2,000 more we're going to execute in the course of H1. And in terms of perimeter, the perimeter as it is right now in the, I would say, beginning of 26 is the perimeter that will continue going forward.
many consultancy peers have suffered on the market because of this huge sell-off, because AI will disrupt them. Is some of this justified?
No, I think it was a fear in the market. And, the market sometimes is too optimistic or too pessimistic. I think we are too pessimistic. In AI, there is an impact for service company like Atos, but we definitely think that the position we have in the defense and what we talk about critical mission systems makes Atos quite relevant for the future. And we think that AI is quite a positive for us going forward.
Are you back winning contracts? And if yes, what kind of contracts?
Yeah, so in fact, with Atos, we have 6 different business lines. There are 3 of them that we are pushing, let's say, more than the rest. Agentic AI is one, cyber security and sovereign. Sovereignty, in fact, it's true for the different, let's say, geographies in the world. It's true also in the US, it's true in Canada, it's true in Europe, in Middle East, and Asia. So that's the 3 where we're going to push quite harder, in fact, in the course of 26. And AI, in fact, will be embedded in these offers with agentic for sure, with cyber and with sovereignty. We definitely think that we will mix our operations with staffing and agents in going forward.
I mean, are a lot of these contracts actually related to AI? How do you expect it to change your business and how customers use you?
Yeah, in fact, for us, the impact will be twofold. There is one impact on agents. As I say, agentic, it's a big topic coming. We're going to put agents in the different delivery of our business, and we will put in place agents for customers also in their process. And I would say probably back office is the one that will be probably more touched in the future. That's the first impact. The second impact is on applications, the coding. In fact, with agents, the coding is much more simplified than it was in the past. We estimate that, in fact, with coding and testing, most of it could be automatized, which means that, in fact, we can deliver projects faster and cheaper. So we don't expect, in fact, the IT budget to move that much in the course of 26, but with the same amount we're going to have, we're going to deliver more to the customers.
Monsieur Salle, do you think you'll have to renegotiate Atos's debt?
No, I think the debt we have, in fact, it's the timing is end of 29, end of 2030, and end of 2032. So there is no rush for us, I would say, to do that. The first tranche, what we call the 1L, due to end of 29, is quite expensive because it's around 13%. Mm-hmm. So that's why we say to the market that if we can, in the course of 26, we'll try to refinance this first tranche just to lower, of course, the interest on this part of the debt.
All right, thank you so much for joining us, Mr. Philippe Salle, the Chief Executive and Chairman of Atos. Now, let's also go back to the markets because there is, of course, quite a lot going on after the week that we've had. If we look at bond and stock markets, look, it does seem that we have a bit of a risk-off shift. European bonds and stock markets are still telling us very different stories today. Now, this rapid repricing of central bank outlooks in the light of higher energy prices seems to be causing some of the big moves in bonds, with, for example, the UK 2-year yield up another 10 basis points, Euro region yields also pushing higher. But if you look at stocks, they've just been much more sanguine, right? The Stoxx 600 only off by about 0.2%. S&P futures, you can see 0.4%. So it feels maybe like there's a little bit of a mismatch. It could spell, I guess, more trouble for stocks if equity traders start to align with their fixed income counterparts in general. I would suggest this is not only a European story, but also a U.S. story. And then we had, of course, the Qatar energy minister also warning of lengthy energy outages. Coming up, Bloomberg's Michael McKee will be sitting down with the Fed's Austin Goolsbee for an exclusive interview. That's at 2:30 p.m. London time today, and then at 8 p.m. London time. Mike will also be speaking with the Cleveland Fed President, Beth Hammack. So stay with Bloomberg for that. Up next, Bloomberg Brief, and this is Bloomberg.